Study Objective 6 talks about the adjusted trial balance and how to then prepare financial statements after you have an adjusted trial balance. The adjusted trial balance is simply a trial balance that has been adjusted for all of the adjusting entries that you just learned how to make in the earlier study objectives. You can see here that going back to study objectives 4 and 5, where we saw a bunch of adjusting entries, you can see that these red numbers now show updated balances after adjusting entries have been journalized and then posted. So this is now an up-to-date trial balance, and we can go forward and make financial statements from it. Now, the trial balance is typically in financial statement order. So you can make financial statements by looking at the trial balance and deciding where your asset, liability, revenue, and expense accounts are. So the income statement accounts are typically down at the bottom with revenue first and then the expense that follow. So the income statement we know is the first statement to be prepared. So all this information goes up onto the income statement and we produce net income of $28.60. Then the next statement to be prepared is the retained earnings statement. The beginning retained earnings amount is what comes from the trial balance. Okay, so it starts off at 0 because it's a brand new company, and we can see the beginning balance is 0 on the retained earnings statement. Net income of $28.60 gets added to retained earnings. That's the profits of the company, so that gets added. And then we see on the trial balance that dividends of $500 were paid to shareholders. So of that $28.60, $500 was paid out as dividends, leaving the retained earnings at the end of the month at $23.60. And now after we have that, we're prepared to make a balance sheet. The balance sheet items are all on the top of the trial balance, with assets first, followed by liabilities, and then equity accounts. So we've got all of our assets that come up into the asset section, liabilities, equity, and you can see that retained earnings is no longer this 0 amount, but rather it's the ending retained earnings balance from the retained earnings statement that we just prepared. And then you can there's a do it example here where they give you an adjusted trial balance and they ask you to figure out net income, assets, and then what's the ending retained earnings balance, and it goes on to calculate everything for you.